Simeon, I'll start with you on this one. The cryptocurrency side of things has gone through what many are characterizing as a cryptocurrency winter or a real depressed period for prices and interest. How exactly do you put this particular price move that we're seeing in the context of what we've seen in terms of price action for the balance of cryptocurrencies in the market?
Sure. Look, military conflicts, we know the drill. It's oil's going to go back down and equities are going to go back up. That's what's going to happen. But number one, it's just sometimes hard to stay in your seat. And number two, mitigating volatility in a portfolio means a lot because you can get 8% a year with low volatility. Actually, you'll compound to more than 10% with lots of volatility. So having diversified assets means a lot. And so far in this conflict, actually, if you look at Bitcoin, it's up a little bit and equities are down. So the diversifying piece, I think, still stays intact as an important theme here. And that's what I think is important to focus on. So many folks have concluded that cryptocurrencies, Bitcoin, Ether, Solana, XRP, that they're just risk assets. But if you really run the numbers, you can see that not only do they have de minimis correlation with equities, but they also have extremely low correlation with gold and silver, as an example. So I think the diversification story really holds in this current environment.
Kim, I'd like to bring you into the conversation here. You heard Simeon's response to my question there. I wonder how you would characterize what you've seen in terms of the price action around cryptocurrencies, Bitcoin in particular. It's the biggest one out there. It's the one that's the most paid attention to. But what exactly has that price action told you about whether it is a correlated, non-correlated asset, what the use case is with regard to the kind of anti-fiat currency, anti-traditional markets trade, the kind of decentralized finance side of things? How exactly does that shape up, given what we've seen with the geopolitical conflict in the Middle East?
Yeah, Dominic, thanks as always. I agree with a lot of what Simeon said. I would parse it this way, though. Price and proof rarely happen at the same time. And Bitcoin was trading at 125,000 5 months ago. So it was down 50+% when this conflict erupted. So I do like the fact that it's outperformed a lot of other asset classes, but you have to widen the lens a little bit on that. And it's up 10% off the lows, which is encouraging because, as you pointed out, Dominic, I think like we do every 4 years, we go through a nuclear winter. And I think we're doing the bottoming process in this nuclear winter because you have so many positive things that you were alluding to, all the way from last year when we had the Genius Act. This year they're trying to get the clarity legislation pushed through. You get people like Kraken that are tokenizing with NASDAQ all stocks, not all stocks, but a handful of stocks starting next year. So these are constructive things that are kind of building use cases, but I think the market is quickly realizing as time goes on, Bitcoin is a digital asset where stable coins are what they say, they're a stable currency. Bitcoin doesn't live between both of those in my mind. It lives in that digital asset speculation purchase.
You know, Simeon, a lot of folks over the years have referred to Bitcoin specifically as quote-unquote digital gold, right? I wonder if from a market strategist perspective and somebody who's kind of seen how precious metals prices have evolved over time, over the course of the last couple of decades, when you look at gold and silver prices and the price action that we've seen, some parabolic moves to the upside, and then you kind of juxtapose them against what we've seen in cryptocurrencies, Bitcoin and Ether specifically, is it fair in your mind to characterize Bitcoin as digital gold and maybe Ethereum as digital silver? When you see what happened with gold prices and silver prices, how are they similar and how are they different for a trader and investor in this market?
You know, when we did some of this research, I was actually surprised at how low the correlation between Bitcoin and silver and gold was. And, again, back to the risk, whether it's a risk asset, if you remember the sort of meltdown of a few crypto-related financial institutions, actually cryptocurrencies rose in the midst of that. So that's pretty darn interesting. But I don't think the analogy fits in terms of the specifics of what you just said, meaning that Bitcoin's gold and Ether is silver, because there are different roles for these different pieces of the universe. there are stores of value, and then there are things with utility on the blockchain. And I'm going to stop there because I'm not the super duper expert on the white paper and all those things, but those are very different use cases. For example, Bitcoin is really just a store of value, but Ether has utility on the blockchain. It's one of the reasons why we were really pleased to launch KRYP, CRYP, our ETF just about a month ago that follows the CoinDesk 20 index, which gives you an indexed approach to all these different coins in the space. There's no stable coins in there, but lots of other stuff. And it's a market cap weighted index, but it's capped. So Bitcoin and Ether are about half the weight. If you took them just in nature, they'd be about 85%. So that's a good way to capture the breadth that's going on here, because yes, there's store of value elements to some of the elements of the crypto universe, but there's also DeFi, there's also utility on the blockchain, and having a broad indexed approach can make a lot of sense.
Kim, one of the things that we've seen over the course of the last week or so, maybe I'll call it a week and a half, since the Iran conflict really kind of got going in earnest, was this idea that certain risk aversion type assets, or maybe so-called safe haven, if you even want to call them those, right? Many of those assets kind of rose up in value, gold and silver, included, but then have seen some weakness on a relative basis in the last few days or so. The risk side of things versus the safe haven side of things is something people look towards in precious metals vis-a-vis the value of the US dollar and everything else. But those cases aren't as easy to make when it comes to cryptocurrencies that are not tied to fiat currencies whatsoever and are meant to tackle different types of roles in a portfolio. How exactly do you think investors and traders should be looking at the way cryptocurrencies function in a diversified portfolio, given what you've seen with gold and silver?
Yeah, that's a great question there. I think, again, with looking at Bitcoin as a digital asset, it does provide in a longer sweep of time some diversification in a diversified portfolio. I think this is the first time in probably 8 years that I can remember that it really feels like Bitcoin's valuation is behind all the regulatory changes and kind of tailwinds that are going on in the industry, where many times in the past 8 years it looked like Bitcoin was trying to front run a lot of that. So that's very normal for it to happen with an emerging asset class. So I like seeing that going on, and it does give me conviction that I think the thesis as a risk asset still plays out. I think the other interesting thing, again, kind of breaking out that stablecoin, which stablecoins are exploding, but it's interesting, 80% of the use case for stablecoins is trading other cryptocurrencies, 80%. There's only a couple percent of stablecoins that's actually used for going and buying stuff outside of that. So that needs to continue to expand to get more broad adoption of it. But we like to kind of express ourselves with BitW, BITW, that basically is 3/4 Bitcoin, and then it's a little over 10% Ethereum, and then you get a sprinkling of Solana and Link inside of there.
It's interesting because there are a couple different approaches that when it comes to cryptocurrencies, and it maybe speaks to what could happen evolution-wise with these products. Simeon, you had talked about this idea that you were launching this ETF. You have launched this ETF that is tied to the Coinbase 20 index, and you can kind of look up what those 20 assets are. That is a kind of passive index-oriented approach, or an attempt to do that kind of thing for cryptocurrencies. There is, of course, also the case that's being made these days because the hyper growth in many parts of the ETF market has come from actively managed type instruments. So, Simeon, when it comes to your perspective from a strategy standpoint, at what point do you think we will start to see a little bit more of a focus on the active management side of cryptocurrency portfolios, the picking, if you will, of these currencies, these cryptos, versus taking that more indexed approach from an allocation standpoint?
Well, the beauty of the market is that they feed one another. So you want the ecosystem to have plenty of trading. You want the active folks to be making sure they're there, looking at the marginal price, looking at any discrepancies where they see opportunity. But you also want the index-based approach for people who just want to make sure that they're capturing the evolution of the crypto space. One of the nice things, by the way, about the CoinDesk 20 index and CRIP as we follow it is it's actually reconstituted every quarter. So it's an index, but it's not sitting there static. Well, we know equity indices reconstitute once a year, but that's like a little thing. But in the context of the rapidly evolving crypto space, that can be important as well. And we're also talking a little bit about the stable coin space and the Genius Act. And that's super important stuff because that element of real store of value in the stable coin space has really been supported by the Genius Act. And it's one of the reasons why I'll give you one more launch we just did, IQMM. It's our ProShares Genius Money Market ETF. And what we did is we came out with the first ETF that complies with the Genius Act so that the $250 billion stablecoin index group can use that as a reserve. A lot of innovation there, 2 NAVs every day. You can have same day settlement, weekly distributions. And that Genius Act is just a smidge more tight than regular money market rules, a little bit shorter, no agencies, and a very nice solution for the stablecoin universe.
Simeon, could I just follow up really quickly? When you mention that particular fund, it is not a fund that invests in stable coins or other cryptocurrencies. It is a fund that invests in the types of instruments that are approved to back up these stable coin offerings. Is that right? It's a reserve
That is
asset.
Exactly right. It is the first Genius Act compliant money market ETF designed for both regular institutions and individuals, but very specifically to be used for reserve behind the stable coins. Exactly right. Thank you.
All right. Kim, back to you here. I mentioned the active versus passive approach here. When it comes to how you would tackle cryptocurrency investing, how exactly then would you, as an allocator, as a portfolio manager, look at some of the risk profiles and some of the return profiles of the kind of bigger cryptocurrencies out there in order to better understand how you should use or how investors should use various cryptocurrencies outside of, say, Bitcoin and Ether to round out their portfolios?
Yeah, that's a great question. Again, kind of that BitW isn't actively managed by Bitwise. They're kind of actively moving around the components, but as I mentioned, it's such a majority Bitcoin and Ethereum. For myself, as an asset allocator and a portfolio manager, I look at Bitcoin as my benchmark, and then I bench everything else against that. If there's an active manager, and even if they're using altcoins that are down the market cap ladder, I'm looking at Bitcoin as their benchmark. And if they can't beat Bitcoin, then why, I don't need their active management if they're just going to cause turnover and other altcoins that don't seem to work. So it really is kind of looking at that Bitcoin, which has been a very, very, very difficult master to beat. As we've all seen, and we've looked at all these active managers, whether it's wrapped in an ETF or they're separately managed account active managers, they've had a very difficult time trying to beat, particularly the last 5 years, Bitcoin. So they got their work cut out for them, and I think that at some point as use cases continue to increase, they'll hopefully have a better luck at it.